our margin after tax on those gold ounces, we're making almost $1,300 an ounce after tax per ounce produced. That's the number we should really look at, is what does the overall enterprise make on an after-tax basis.
In this one, we're talking about gold exploration in southern British Columbia, specifically the Spence's Bridge Gold Belt. Now, Westhaven Gold has 4 projects on this belt, and they're taking advantage of existing mining infrastructure. Fun fact, they're currently executing on a fully funded 50,000 meter drill program. This is the biggest drill program in the company's history. President and CEO Ken Armstrong is here to tell us a lot more. Ken, before we cover your drill results that you just released to the market on May 26th, can you give us your 30-second pitch on Westhaven?
Sure, yeah. So Westhaven, we're a Vancouver-based exploration, I think, switching to development company. And our project, as you mentioned, in the Spence's Bridge Gold Belt is in southern British Columbia, easily accessible, excellent infrastructure advantages. We have a PA that shows we've got a million-ounce resource that can be developed into a pretty compelling mining situation. We have a new partnership with Dundee Corporation that's funding the next $85 million to advance on that development opportunity, high-grade, high-margin underground mine, but also focusing on exploration, because there's an opportunity here to find a lot more ounces in this belt. We're just sort of ramping up on that program with that partnership now in place.
Mm-hmm. Well, we'll unpack all of that later, but I want to talk about these drill results, right? Just hit the market. Tell us about your headline numbers here, what you want investors to focus on.
Well, I think this is infill drilling on our existing resource of the South Zone deposit. As I mentioned, we have a global resource amongst 3 deposits in this low sulfidation epithermal style of mineralization. That's about 1 million ounces of gold equivalent, but it's very high grade, wide widths, and we see that in the results that we issued today. The headline number was 8 meters, grading 47 grams per ton gold and another 229 grams per ton silver. That's within a wider envelope. It's 33 meters wide and grading 14 grams per ton gold, and that's pretty typical. So we see a number of holes that are kind of above that 100 gram meter thickness, which is a sort of a metric that a lot of investors like to look at, and on the development side, we're getting a number of intercepts like that. This is, as I mentioned, it's infill drilling. The important piece is it's showing continuity of these wide, high-grade intercepts, and that's really going to be important when it comes to putting together a new mineral resource estimate that's going to support the pre-feasibility study that's underway. Having that continuity, those wide, high grades means that we'll be able to connect those within the resource, and it just helps solidify the resource and helps things like grade capping, which is something that you need to do when going through that process. But when you have the connectivity that we're seeing of these intercepts, then it means that grade capping will be impacted sort of in a positive way.
Well, 50,000 meters is a lot for any junior. What are we overall chasing here when we look at this program, bird's eye view?
Yeah, again, 2 main components to it. So we started in mid-February on the resource infill drilling that we're doing at the South Zone, and that's 35,000 of the 50,000 meters is focused and dedicated to that. We started with a couple of drills, and we said we'd ramp up to 4 drills by June 1st, and we actually got there by May 15th, which is great. So we have 4 drills operating on the property. 3 of them are focused on that resource drilling, which will carry on through till sort of the end of August. The other component, we have 15,000 meters dedicated to exploration drilling, and that's sort of the real big picture upside that we see. This style of mineralization, once you find one pod or a series of pods of mineralization, or shoots if you call them that, along a structure, if you can find other similar structures, it can be a big system. And we know we're in a big system on the Shovel Nose property itself, but also the Spence's Bridge Gold Belt. If we really zoom out and we look at, you mentioned we have 4 properties along this belt, and that's about 100 kilometers of strike extent. We see gold-bearing epithermal quartz veins in the same sort of orientation, the same age, the same style of mineralization along that entire trend. We think it's all part of the same system. It's the same plumbing. And Westhaven has just never been in a situation where we've been able to finance exploration along the entirety of the belt and properly follow up the targets that we have. and we can do that now with the funding model we have in place with Dundee.
Well, I want to talk about that before we get to the PEA. So Dundee has come in with a deal, strategic partnership worth $85 million. But unlike most JVs, Westhaven will retain a 40% interest in this JV company. Talk to us about what optionality this gives you.
Yeah, it's an important aspect of our decision to enter into the partnership with Dundee. We had to consider basically weighing that off going it alone and advancing the project on our own. And we had a couple of metrics that were really important for us if we were going to entertain this sort of partnership. One was to keep a 40% interest, a meaningful interest. And so I think to your point, the market hasn't really seen this sort of split in probably the last 15 years. Usually it's the major party coming in and taking an 80% interest, or at least a 75% interest, where it's kind of preordained what the outcome is going to be. And in this case, we retain a meaningful 40% interest, and importantly, we retain the ability to transact on our 40% interest. So we're not handcuffed by a right of first refusal at the corporate level. And that optionality allows us to advance and to plan in partnership advancing the project with Dundee, but we intend to be positioned so that we are able to fund our 40% share of construction costs. It's from an optionality perspective, it just means we can pursue advancing and growing Westhaven as a company in a number of different ways that maybe we wouldn't have done if we only retained a 20% interest in the project.
Well, with your PEA, the preliminary economic assessment, for my viewers who don't know what this is, it's a key piece of a document that proves the starting economics of a project. Walk us through the key numbers here. What investors should be focusing on when it comes to Westhaven's numbers?
Yes. The PEA was published in March of 2025. It's a preliminary estimate of what does a mining scenario look like on the project. It takes into account mining all three of the deposits we found, so including the South Zone. We have two sort of satellite deposits we call FMN and Franz that are located over a 4-kilometer extent within the northwest part of the property. Main numbers to keep in mind, it was done at a $2,400 an ounce gold price as the base case. The silver price was $28, and we see a net present value at a 6% discount rate of 450 million Canadian dollars and a 43% internal rate of return. At sort of $4,000 gold, if you plug that into our model, then the valuation tips over $1 billion, that NPV, still at a 6% discount rate. So that's really compelling in its own right for a deposit of this size. I think the really key metrics are the fact that this mine is going to make money. It is high grade. The diluted grade in the mine plan is 5.2 grams per ton gold and over 30 grams per ton silver. The mine makes, over an 11-year mine life, on average between 80 and 100 million Canadian dollars after tax. That's because of a low all-in sustaining cost that's under $900 US an ounce. Our pre-production capital cost in the PEA is under 200 million Canadian dollars, and that's another key metric. It's low when we compare it to other potential developments, and the main reason is because of the infrastructure advantage. We're right off the Coquihalla Highway. For those viewers that have traveled in southern British Columbia from Vancouver, if you've gone to Kamloops or Kelowna, along the Coquihalla, you've driven over our mineral claims. We're right there, easy to get to. There's a power line right of way that services a cell tower that's in the middle of the property, and that right of way actually splits between the deposits that we found. So we don't have a major infrastructure project that we need to develop, at the end of which the mine is going to be built. We can look at just focusing on what is the cost to build this thing.
How many ounces does that translate to per year, Ken?
It's 56,000 ounces of gold a year, and then it averages between 300,000 and 330,000 ounces of silver over the mine life.
Now, what would you say to critics who may say, 56,000 ounces per year sounds small? What's their response?
Yeah, it's that I think that's an interesting metric, because we do get that in conversations, and I think that there's sort of this idea that for a proper Canadian project you need 100,000 ounces a year of production or more just to be of interest, to be and I think Dundee coming in as a partnership, looking at this project and seeing the production profile, clearly that didn't dissuade them. So I think that's a sort of a point of support for the project. But most importantly, it underscores, again, the location and the low capital cost. That 100,000 ounce a year metric that we have in our head is because most projects in Canada will have a $500 million or $1 billion pre-production expenditure that's required, and you need to pay that back as quickly as you can. In this case, we don't have that. It's under 200 million Canadian dollars. Our margin after tax on those gold ounces, we're making almost $1,300 an ounce after tax per ounce produced. That's the number we should really look at, is what does the overall enterprise make on an after-tax basis, and on that basis, Shovel Nose and the potential development there, making that sort of $100 million Canadian after-tax value it compares really favorable to other development stories that are producing 100,000 or 200,000 ounces a year. So it's really should look at how much money is the thing going to make versus how many ounces are being produced.
Well, I expect to see Westhaven in the news quite a bit over the summer, as of course you're busy with your drill program. Can you talk to us about key catalysts, aside from drill news, that could move the needle for shareholders out of Westhaven?
Yeah, I mean, drilling is going to be a key part, certainly for the next 4 months. I mean, it's 50,000 meters is a lot of drilling. I think we can expect regular updates on the resource infill drilling. As mentioned, I mean, it is sort of confirmation drilling. So the resource isn't going to grow, say, from 1 million to 2 million ounces, but it's going to solidify the ounces that have been found and support the pre-feasibility study. There are other activities happening in parallel on the pre-feasibility study. There's metallurgical samples in the lab. They'll be reporting on that. We're starting our environmental and our socio-economic baseline studies in advance of entering the environmental assessment process, so we'll provide updates on that. I think from a market perspective, the key thing is going to be exploration. We just completed an airborne magnetic survey of the southern part of the Shovel Nose property, which we expanded 2 years ago. We'll be using that data to come up with drill targets that are going to get folded into the exploration drilling program, which is going to start this summer. And 15,000 meters will be 3 times or so more than we drilled for exploration last year. So there's going to be a lot of drill-related news on the exploration side, which is important for growing ounces and new discoveries, but also the resource infill drilling and advancing the pre-feasibility study.
Okay. Well, Ken, thank you for being here. We'll be watching over here at CEO.ca.
Great. Thanks, Rachel. I appreciate your time.
Guys, it's CEO.ca/WHN to check out what investors are saying about Westhaven Gold. Thanks for watching.